Ladies and gentlemen, welcome to Man in America. I'm your host, Seth Holhouse. So, as the Fed continues to hike rates in a desperate attempt to curb inflation, a collapse of the real estate market is starting to rear its ugly head. And according to my guest today, financial wizard John Perez, it's going to get worse, much worse. But there are ways we can not only get through this, but even thrive. And John and I are going to be talking about all this and more on today's show. But before we get started, today's show is brought to you by Rise TV, a Patriot-owned streaming platform. With all the big tech censorship and demonetization going on right now, the subscribers at Rise TV are literally the reason I can bring you this critical information today. Over at Rise, our mission is to uncover the truth, no matter how dark and difficult, while always holding on to hope. We've got a massive content library, an amazing community of patriots, and you get to hang out with me and my guests for the second half of every show and ask your questions and share your thoughts and ideas. So if you have any specific questions for John, make sure you join us on Rise TV. There's a link for a free trial in the description below. You should go ahead and click on it now. That way you're all set up once we cut the public feeds for the exclusive Q&A. Also, make sure you're following me on Telegram and Truth Social at Man in America. And also make sure you're watching me on Rumble and subscribing to me on Rumble. All right, so without further ado, let's jump into today's discussion. So I've had John on before, and he's been called the crypto Nostradamus before, but what a lot of you may not know is that he's actually an expert in real estate. And I was actually having a discussion with my father-in-law yesterday about the real estate market. I could tell how much he was weighing on him. And I was seeing all the headlines popping up of this collapse that's happening. It's the beginning is here. And I thought, you know what? I got to get John on. So I shot him a message on Telegram. He quickly responded and said, I'm on it. So I am excited for this conversation. And look, this is a doomy and gloomy type talk. You know, it's just the world we live in right now, but we're also all about solutions. So we're going to talk about how you can protect yourself in this time. So without further ado, let's go ahead and bring on my guest, John Perez. John, thank you so much for joining me on Man in America.
Glad to be back, Seth. Glad to be back. You have a wonderful show. I always love this show, and I'm glad you're on all these different platforms also. That is really important access. And yeah, I'm just happy back. Had such a great time the first time around, and many of your listeners have joined and have come on board, and it's been great. And many of my listeners have come in and have subscribed to all your different channels. I'm always getting feedback on that there. So happy to be back here to talk more about what's happening in this world, and especially in the real estate world, which has been my specialty since childhood.
Yeah, and that's, as I look at what's happening, I feel very, very fortunate. My wife and I, we bought a house a little over a year ago, and we locked in a 30-year mortgage at like 3.5% or something, which I feel is just like the ultimate blessing this day and age. But
Yes.
Within the past couple of days, we saw the Feds, hike up the rates again. It's over 6%. So also, in preparation for the show, I just went online. I just searched in Google. I put in housing collapse. And every major media, whether it's CNN, Fox, they're all talking about this. So, you've got an extensive background in real estate and finance in general. What do you see happening with the housing market? Is this a correction from the boom we seem to somehow experience during the COVID? Is this another 2008? Is it worse? How do you look at what's happening right now?
Well, I'm going to give you a little background on me so your listeners can get an idea where I'm coming from. Back in, let's see, I started a channel called Real Estate 911 back in December 2021. I created the channel December 13th, 2021 called Real Estate 911. Well, 911 is a reference to 9/11 World Trade Center. December 13th, 2021. My first post was regarding the Zillow CEO, just some problems they were having because real estate market crashes, they don't happen in a vacuum in a weekend. They really are slow motion crashes, and the signs are out there. So that channel now, every prediction I made on there has come true. Now, let me give a background on myself. As a child, I remember going out looking at real estate, well, 7, 8 years old, with my parents, going out to a place called Palm Springs in the mid 60s, which was really the hottest place to be back then. It was like all the celebrities were out there. It was completely different. But Palm Springs back then was a little tiny enclave next to the mountains there in SoCal, and it was just open land all over. And my dad was buying real estate out there into what areas there that are now completely built out. It's like, okay, you got this empty piece of real estate. Everything's grown. So as a child, I was out talking real estate. Parents bought, were buying real estate in the 60s and the 70s. And that real estate obviously grew in value. And so I was exposed to it at a young age, going out, walking property. Of course, dad, there's nothing here. I see just a bunch of dirt and lizards and tumbleweeds. He says, don't worry, son, just give it some time. Okay. So that was my first exposure to real estate. Fast forward during the 1987 crash, the summer of 87, I was pretty much almost a full-time triathlete, but I was working part-time with my dad's company. And in that summer of 87, that was right before the 1987 crash. And read my lips, no more new taxes, stock market straight down. That 87 crash was the worst crash since 1987. That summer, I worked with my father's company, and I remember there was all these sales going on. And I thought, Dad, where's all these sales? We got a lot of sales going on here, but a lot of it was credit and leverage. And everyone in the entire industry was leveraging out. 1987, summer of 1987. And I remember I was getting ready to go back to school. August was coming. Gold and silver were starting to move again like they normally do. And before I left, I went home. I was just doing some research. There was no internet the way there was now. I had to do real digging. You couldn't find anything out there. You had to go through magazines or whatever you could, publications. And I remember right the last week I was at work, I said, Dad, I think we need to pull back on credit. I don't think we should be giving these people credit. This is too much. Because I was going through, we have all these accounts that are back, they're not paying. They're not sending their money in. And I'm going out there doing collection. They don't have the money. So everyone's leveraged out. This is 1987 crash. Because after 87, what happened? Housing crashed. And to put 1987 in perspective, it's either Orange County or national level. In 1996, the average house median housing price in America was lower than the average median housing price was in 1987. That was the summer of 87. We were peaking up. I was Dad, no more credit, no more. And we're going back and forth. It was like, your son, you're coming in here. You don't have to run this business. Dad, I know credit. This is not good. And there was really no writers, no internet. And all we had was fake news telling us that everything was just fine. And there was no internet, there was no analyst, there was no YouTube, there was no Rise, there was no Man of America, there was no JP on Telegram warning people this. Well, of course, that's what happened in 1987, the worst crash since 1929. Real estate was just still going right along. When the stock market crashed, it was going down. Real estate was still buzzing along because real estate agents were selling, doing business. And you turn on the TV at the 5 o'clock news, and it's like, oh, look, the stock market's crashing. Oh, that's stocks. We're in real estate. And that's the way people thought, oh, that's stocks. Well, my father was in the furniture industry. And when you build houses, what do? You buy furniture and put them in houses. And lo and behold, probably the last 2 weeks, we all noticed, I go, Dad, it's like furniture sales are dropping off the cliff. And I said, we need to just cut off all the credit and just go full collection. Let's bring the money in. So I just spent the last couple of weeks just bringing money and get the money in, get the money. Here, you owe us this much. I'll give you a 20% discount. Just send me the cash. I was out there negotiating in 87. I said, how are you getting all this money? I said, Dad, I'm just giving him a break. 10% off, 20% if you pay today. You send me a cash, I will come over there and pick it up right now. 20% off, 25% off. And here I am. If you saw the scene in Margin Call, when they were selling the market out, the Bear Stearns, they were, discount 100 million, you get, 10% off, 15% off cash. And they close. That's how you get the deals done when you had to. Well, as this money's coming in, I see school coming in, stock market's crashing. After I left, credit is being lowered down here. Dad tells me, hey, John, furniture sales have dropped off the cliff, just as you said. I said, Dad, the stock market's going to crash. And lo and behold, it crashed. And so that was my first. Now, what happened now, the reason why I gave the story about my growing up as a kid with real estate, soon, eventually, that market caught up to my father. And we were forced to dump off cash real estate to make up for margin calls on credit lines. These credit lines, they came due. There was no, these were, they held you accountable. The courts came in, it's like, you're going to have to pay this or like liquidate. And I said, Dad, it's time to liquidate. This is the way it goes. And thank God we had a ton of real estate that was paid in cash. So it was like, that was paying off the loans that these guys did not make, because these were recourse loans. Not, in the past, you gave up your house, you filed for bankruptcy, you walked away. It was non-recourse. Sure, you had a bankruptcy, but you moved on. So that was my first experience at a housing crash. And then the experience of having to make margin calls and sell off assets. Well, what was he selling off? He was dumping real estate to make the business margin calls. You think my dad was picky about getting the highest price? No, it was dump it because the courts are calling. I got to raise this money. I've got 90 days, dump the real estate. So as that real estate's dumping, everyone holding on to the real estate's not real. Everything's being sold off. Why? Because the business people, the speculators, the investors, they have to dump that real estate to make their margin calls. And that was my first experience. That was a tremendous learning lesson. That was 1987. And by that time, it was in 1991, 1992, I started working for a company called the Sports Club LA, Sports Club Irvine, Sports Club New York as a trainer, back to being an athlete. And of course, on the side, I was real estate and an industry with my dad. It's about 1992, 1993. Suddenly I had all these clients losing their houses. And of course, I was busy. I'm like, what? You're not going to, we can't work. And he goes, yeah, we're losing our house. You're foreclosing. And of course, me, what's a foreclosure? And I thought, oh, okay. Well, I had like 3 clients go into foreclosure, 1992, 1993. This is 4 or 5 years later. The housing market was finally responding to the crash in the real estate market because people were being liquidated. And my father was one of them. So now housing is going down, and it went down, down, down all the way until it didn't bottom until 1996. Housing bottom because housing always overshoots 2 or 3 years over. Probably the real bottom in real estate financially on paper was probably 1993, 1994. But real estate, just simply because the banking system, it overshoots through 2 or 3 years over. So at 1996 prices, that was pretty much the bottom. And of course, on my research, I was leaving my career as a trainer at that time, and I had access to a large trust that I was working with through a client that said, I want to go into real estate. I said, not yet. I said, I'm moving into real estate now full time, leaving my personal training career. And now I've gone through that bubble, saw my father get liquidated in certain areas here, had to pay off these loans, watched my clients go into foreclosure, very wealthy people losing all these houses there in Laguna Beach and Newport Beach, high-end real estate. And here I am, I'm getting ready to go into real estate, but I got a big pile of cash with the client working with me. So I'm sharing you this story so you understand it wasn't like I just decided to pick up real estate and start researching it and broadcasting it here. I have a lot of experience in this personally and family, and then personally from having clients in there. And then eventually the third round going into it in 1998, I had access to millions of dollars of cash. And I said, we are going all in on real estate. There is a real estate bubble coming. We are going to ride this bubble, and we're going to make a lot of money. And I have one client with a lot of cash. We piled in, and starting in 1998 from Orange County to Aspen, Colorado, piled in. And to summarize that story, that went in as about 2004, 2005. I said, we've been killing it for 6 years straight. It's time to get out of real estate. It was in 2003, 2004. I said, it's time to get in gold and silver at the same time. We need to accumulate gold, ride the bubble out, bail out at the top, and then let it crash, and then come back in at the crash from there. So that's a history of my background there in the real estate sector. It was in 1998 when I had access to a lot of capital to come in and buy up all these beautiful, beautiful high-end properties. I mean, I'd never worked with a real estate transaction under $1 million starting in 1998. One house we bought for 815 grand and flipped it for like 1.1 million in about 11 months time. At that point, the real estate agents I was working with, I was more or less a fund manager working with brokers. The real estate agents were saying, how do you come up with these prices and these numbers? You're not a real estate person. I said, I am. I'm just not an agent. I said, I'm a banking guy. I'm a money guy. I am a financial guy. I know what the banks are writing, what they're not writing, what they're going to write, and I know when they're going to pull the rug out. And that rug pull is coming here.
Yeah.
So
So, and with all, so
eventually,
as
yeah,
you
I'll
can,
pause right there.
oh no, it's just kind of, you know, you've got a lot of reference points for what's happening. So when you look at what's happening right now, I mean, you know, we saw, I mean, you know, like I said, my wife and we bought a house in the last year. It was the most difficult process. We're getting outbid by 100,000 on some homes.
Oh,
It was just insane the amount of money people were spending. So, but now it's interesting because you look at home prices, and my parents, you know, they live in a very desirable area of Columbus, and you know, they saw their home price go up and up and up and up the past couple of years. I talked to them a couple of days ago, and it's now dropping. And it's frightening, but of course what goes up must come down. But what do you see happening right now to the market?
well, I mean, everything's compact. Everything is going to be impacted much greater here. I have said this. Anyone's listened to me for a long time. I've said that the housing crash in 2022, 2023, and it's going to go for years. I think it's going to be 5 times worse than the crash of 2000. Uh, I say 2008. The truth is, for one, in the fourth quarter of 2005, I worked for the third largest REO company, real estate owned, doing foreclosure. We were getting hundreds of subprime, literally an avalanche of subprime loans. And the subprimes returned this week. They're now doing zero down. And I'm looking, I said, here we go again. Here we go again. And they were coming in hundreds, but it wasn't even in the news. This was the fourth quarter of 2005, which eventually the paper I was working at, we belonged to a very large bank that we would all recognize. And that bank was consumed by another big bank, a monster bank that's related to silver. The initials JPM. They took over this bank. And the more I looked at this, is wait a second. I was brought in because people wanted to know, what's your opinion, John, on the market? Someone was following me closely and brought me in and hired me. And I said, this, it's over, man. It's game over. That was 2005. And of course, everyone debated me and argued with me. I said, it's going to happen. And by when the stock market started crashing in 2008, it was September, October 2008, which I believe we're repeating right now. The stock market's going to crash. I think we're going to see a 1929 crash here, probably in the next 6 weeks between now and Halloween.
So
When that market
you're saying
crashed,
that within the next 6 weeks, we're going to see not just a crash like a 2008 crash, but a 1920s crash. What does that look like? What kind of percentage are we losing on that?
I think we're going to see the Dow Jones pull back between 3,000 and 5,000 points. We had 1,000 points on Monday, and that was just breathtaking. And gold and silver decoupled, but I see a 3,000 to 5,000 point move here, based on a number of events. The meeting with Vladimir Putin and Z with the SEO today, talking about they're moving to a new gold standard with the gold back ruble, gold back yuan, which are not announced publicly yet, but they will be soon. We've got another rate increase coming from Powell, which is when he does that rate increase. I mean, it's just going to kill real estate amongst everything else, and then it's going to increase inflation. I mean, there's no way for them to stop inflation at this point. We've had all this money printing now that's all out there, but it's all being reeled back in. People are trying to save. A lot of what you talked about, you go to buy a house, and it's like, why? Where's all this money coming from? They turned real estate into a casino, and so now people were gambling and throwing money and bidding houses up. Well, now you can look it up. The story I look this Zillow is in big trouble because there's some stories out there talking about these big hedge funds driving the prices up so they can connect with the loans on the other side. And it's out there. Zillow CEO, this headline here, Zillow CEO on getting out of the home flipping business. What were they doing flipping homes? Because Zillow was controlling the price. This is another story. It's on my Telegram channel. It's called Real Estate 911. I document all this, all straight references. I give a commentary, one sentence. You can see when you look at this, what they were doing, they were artificially pumping up these prices, which of course the banks love that. Why? It's just more loans to get interest on here. And
And
so
they're pumping
as
up
these,
because the Fed just printing money nonstop, and most of it's going to these
yes,
big banks, which are then injecting it into the market. Which is why, is it right? We're
yes,
seeing the stock market's doing great, the housing market's doing great, and it's because they're just. It's almost like the great push before the collapse. Is that the correct way of
yes,
understanding it?
it's free money. Yeah, because see, like you get a loan for 3% and you can go buy a house. That's a good rate for a retail buyer. But the hedge funds and the banks, they're getting it for nothing. So they can go in there and say, look, we're going to get this for like damn near nothing, half a point, three-quarters of a point. We can go ahead and just buy this bunch of real estate, push it up 1 or 2 points, and then flip the real estate. And then we make our 1 or 2 points on a couple billion. And this happened last time in the stock during the dot-com bubble. They had people pumping these stocks up, and it was the same thing. But the hedge funds, there was something going on, and I document this at Real Estate 91. There's something very smelly going on, and it's proven now. It's actually proven they were artificially buying up real estate, pushing the prices up, and now they're getting rid of these. Well, who loses here? The man on the street, the
Yeah.
man and woman in America who's just looking to buy a house, raise a family, live the American dream. And you go out there, you're struggling. Well, why are these houses going up? They've turned it into a casino. And now that they're done playing their game and they've got their money locked in, their profits, and they're ready to dump off this real estate, even if it's a loss, they've made their money. We're going to see the pullback coming. And soon, when the stock market crashes, during the last crash, a lot of people never saw this. I had friends I warned for 2 years, get ready, get ready. They didn't listen. When the stock market crashed, the bank stocks went down. What a lot of people didn't see was they froze all the HELOC loans. They froze equity loans lines, they froze HELOC lines, and they froze business lines of credit. And that was the bunker buster of economics. That was never small news here, but all of a sudden the banks are not giving out loans. Well, the investors that are real estate speculators, a lot of them, I own 3 houses, they're cash flowing. It's okay, they're cash flowing, but what's your debt here? What are you carrying? That sounds like a liability to me. Oh, well, I'm using my credit line from the third house to pay for all the things here, rent, and I got rent coming in. It's like, so as soon as that HELOC it's over. And I saw people that were renters at houses, pound on the door, boom, boom, boom. You got 3 days to get out, 3-day notice to quit, get out. You're being evicted. Why? I'm a renter here. The owner owns a house. Well, this owner, he owns a bunch of real estate. It's like, owning a bunch of real estate does not mean you own anything here. You got to look at the paper. Well, come to find out, many of these it's going to happen again too. People need to be careful. Who owns your house and are they leveraged? What happened back then? And this happened everywhere. It was all over the news because, of course, I was a full-time real estate guy at that time, and I was moving full-time into gold and silver. In 2006, I became a broker. But in 05, 06, I was watching the collapse. And while this collapse was going, they were lowering the interest rates. They were making these teaser loans. You can get in on, zero down. You can get in with, zero down and a small interest rate that bumps up. When you got bumped up, you got bumped out. Well, now all this stuff is happening again. But when the bank stocks pull back in the crash of 08, who came into office in 08? It was Obama. And Obama came in. And of course, the famous video says, oh, Obama's going to pay our mortgage. We're not going to have whole payments. Everything's going to be great. It's, oh, my goodness. It's like the end is here. It's like the biblical end, or like maybe the end. And what happened when the banks pulled out their HELOC credits, equity lines, and business lines? They did that because because the CDS loans were coming in, the derivatives were coming in, and all the banks were exposed. They bought all this bad paper, which was quote unquote senior paper. But now the derivatives were coming in and the banks were being hit across the board. The hearings came later where you had all these guys' hearings. They were under house arrest. They wrote all these bad loans. But these loans it wasn't like the regulators didn't know. This is just the way the industry works. It doesn't help it doesn't help Main Street when you see these events. And to me personally, my opinion is these are all scheduled events. This is just, like right now, what I see coming here is a crash much worse because there's, number one, there's so much money out there. So many people are leveraged. And then we had the COVID. We didn't have COVID back then. Businesses have just vanished. There are so many empty malls, empty businesses. And, we've had all the fires in California. Now we've got all this money going to Ukraine. There's thousands of record homeless in California since the housing crisis. Well, a lot of people are homeless. They've been homeless since the last crash. We've got record homelessness, but this COVID thing here, there's the possibility of this COVID thing going to another phase of Marburg. And if that happens here, they do another lockdown, businesses are going to be punted right out of business. When the banks pull back, there's going to be nothing there. And then people say, well, John, gold and silver not going anywhere. I said, gold and silver are the last line of defense and the last warning label. I said, for now, there is no canary in the coal mine. The canary has been removed and they put a rubber duck there. So the canary, even if there's no oxygen, the canary will just sit there and smile because they removed the canary of what? The inflation, the CPI inflation numbers, consumer inflation. They removed fuel, housing, and there was one other piece. You take out fuel and housing
Food.
from and these numbers are false. And you got to go to what's it called? A shadow stats to get the real numbers here. So so many. I'm sorry to go on and on. There are so many variables that are coming in that it's overwhelming. But I've said this since last year. This housing crash will be 5 times worse. It'll be far more aggressive. And we have Europe crashing too because of the Ukraine situation. And then we've got propane Armageddon coming this winter. We have energy suicide in Europe. And these things are not talked about on the news, which is maddening in and of itself, because I think for me, it's a responsibility to get the word out, to get people aware so they start to see what's happening there in the markets.
And so when you say that it's a great analogy that they've taken the canary that was in the coal mine and replaced it with a rubber duck so that you can't actually see, there's no warnings. And so are they intentionally hiding? It's like they know that this collapse is coming. They know that the fiat currency has run its course and that they
Yes.
can't just keep printing it. And they're in this deadlock between hyperinflation yet raising rates, and they can't raise rates to counteract hyperinflation. It just, the more they do anything, it's going to spin it out into an absolute currency death even quicker. And so you mentioned the
Yes.
CPI, that the consumer price index, which is showing by them removing fuel, food, the things that are actually really going up and they're driving people's and really hitting people's wallets every month. They're hiding the fact from us. Mainstream media is not
Yes.
talking about the facts that we're entering into what seems to be, based upon what you're saying in my own research, almost like an apocalyptic period of just collapse of currency, housing, real estate, food systems. And it's not like World War I, World War II, where the government was on the side of the people and they're saying, plant victory gardens, here's how you can survive this. It's almost as if they want people to hit the wall going 100 miles an hour and not knowing how to brake until it's too late. Is that correct? And what do you think about that?
I agree. I think you hit the nail on the head. Actually, I was probably being very businesslike coming off in the first part, but yes, I believe this is an absolute planned detonation. This is a planned demolition of the middle class. This to me is an extension of the WEF Klaus Schwab Great Reset. You know, if you stop and look at it, what I see here is like, well, if in order to fulfill Klaus Schwab's dream in Europe, this is how you do it here. I talk about propane Armageddon. Nobody sees this. There's something coming called, and it's an propane Armageddon. We're going into what I would call the death winter mini ice age this winter. And it's actually, there's an Arctic blast coming to UK right now. Energy is a big problem. Starting in October of 2021, all of our liquid natural gas and propane has been shipped to Europe to make up for the losses of, well, what's happened? They shipped all the supply to where the demand is, and not leaving Americans with no supply, therefore having to bid up the price. So as people suffer financially, they're going to suffer even more this winter. We're going to see energy bills 300, 400, 500% more, just as these markets start to crash here. So in my opinion, yes, if we were to do just a video on just this planned detonation, it would, at the end of an hour, 2 hours, like, this is absolutely planned. There's no way you can have these markets disintegrating like this without it being planned. You just have to. I mean, you look at the things I've been saying for a year here. It's like, this guy was talking about this 6 months, 8 months ago. How is it so accurate? Because I know the plan. I know what their plan is, and I don't trust their plan. Um, this is a planned detonation, and it's part of the Great Reset, in my opinion. I think Biden is just doing the Klaus Schwab on America. And of course, they'll point at Russia. Oh, Russia's fault. Russia, Russia. Well, of course, the dog ate the homework here. Yes, this is a planned detonation against the economy. And I think people really need to I think right now, what I'm telling my people at Silver is Money and my people at Silver Gold Stocks in preparation. I mean, I'm a hardcore there. I don't hold back. You got to get ready right now. Run. Like you need to I don't trust the banking system. I looked at the bail-in system. I don't trust it. Why is it? There's nothing stopping them from grabbing it. Look it up. Bail-in laws here. If your money falls under some sort of custodial situation, legally they have the right to take that money. Imagine if the stock market crashes, energy goes up 300%, and then they have a bank holiday on September 24th, and all of a sudden you can't access your cash because there's some event comes up September 23rd, 24th, and and all of a sudden, wait a second, I have no cash. That's why I'm telling people you need to have cash. You need to have 6 months of cash at home. You need to have 1,000 ounces of silver. You need to have enough propane and liquid natural gas or firewood to last 6 months in a bad winter. You just have to have that.
Yeah,
You got two Harleys, sell one of them. Get silver and energy. We're at that point now where I have to scream now and just tell people, get ready. There's like no time, because how do you know? I've been to this before. But now I said, and I tell people, like, okay, it's 1:30, market's closed. What are you doing, Perez? I am panicking and preparing right now because I see what's coming and I know too much. And I said, but I can only tell people so much. Only people are going to listen. But right now, people right now should privately panic. What I mean, private. Okay, I just heard what this guy said. I've been seeing the signals here. I'm going to sit down. I tell people, get yourself a legal pad. Put a line right down the middle. Put need on this side, want on this side. Whatever you need right here. On your want side, get rid of it. Unload it. Because if you don't unload it now, as soon as hyper deflation hits after the banks don't have any money, it'll be your $20,000 classic car is going to be worth $3,000. So just unload it.
Yeah.
What gold and silver are not moving. Why? Because they're suppressed. I covered that in the silver psyop here. So at this stage of the game, if you're your audience, I would say it's time. It's right now. It's right now. You got to go to work right now. Don't wait. Don't wait to see the tsunami. It's earth. I just heard there was an earthquake in Sunset. Tsunami alert. Let's go run down. No, prepare. Don't look for it. Run from it. Why? Because go to the high ground. But I don't see it yet. If you see it, it's too late. When people see these things happen, it's too late. You have to prepare. And I got to read this quote here from, this is from an old article on Weimar, Germany, regarding personal property. There's a lot to this article here, but it says capital was preserved by those who early changed into objects of lasting value. Rare coins, gold, silver, platinum, palladium, jewelry, gold, silver. First two things. Rare coins, stamps, jewelry, works of art. I'm not art guy. No, not NFTs, antiques or merchandise such as clothing, fabrics, because you won't be able to get this stuff here. Of course, most people did not understand the advantage of accumulating such property until the inflation was well along. Or in other words, there's this tsunami of inflation. Too late. You should have went to the high ground earlier. By that time, the price of all goods had risen so much that they seemed outrageously bad bargains. In the event, however, cash proved to be an even worse bargain. Now imagine cash in the bank and there's a bail-in. I mean, switch it out for physical metal. Switch. I tell people, I say, John, I got this. I got all the silver. I got this. I got that. I got money in the bank. Just flip it for metal and wait till wait till the coast is clear. I said, the way I see it right now, I see a tsunami of things now to where even me as a researcher, completely overwhelmed by all the various. It's like watching that. The perfect analogy is the tidal wave in Fukushima, when there's a clip of a van going down the street, and all of a sudden it stops. It sees it coming and it turns around and it takes off. And what do you see? Like a 30-foot wall of debris, not water, debris, mud flow, houses, everything, cars, people, bodies, boats. That's what I see coming right now in the financial world. And Wall Street's not going to tell you, CNBC is not going to tell you, CNN's because fake news. If there's fake news, there is what? There is fake business news. If there's fake news, there is fake weather news. I think it's all fake to me at this stage now in the business world. I do remember what Jim Cramer said about Bear Stearns stock. It was trading at $109. He goes, someone asked, should I sell my Bear Stearns stocks? And it was in the movie Margin Call. Should I sell my Bear Stearns stock? No, keep your money in the markets. And Jon Stewart roasted him for that. And the Bear Stearns stock went from $100 to $2 a share because they were buried in this bad derivative. As Warren Buffett would say, derivatives are weapons of mass financial destruction. So in a nutshell, your people on your show, what I tell anyone comes up to me and say, dude, you got to move right now. You got to move right now. But why? It's too late to ask why. If you look at my work, you'll say, well, this guy was screaming Chicken Little 6 months ago. Well, now Chicken Little was right. It's coming here right now.
Actually, so John,
move.
I've got a quick note from our sponsors, which happens to be quite on topic. So let me get through this really quickly and we'll jump back in this conversation. So, folks, by now we all sense that we're in for a bumpy ride for the foreseeable future. And as this conversation shows you, much of the world is going through a process that experts are calling de-dollarization. So what does this mean? Well, the US dollar is a fiat currency, meaning it isn't backed by anything of value. You can thank Nixon in the 70s for doing that. The only thing that gives our dollar real value is its demand around the world. But by now, especially under the corrupt and incompetent Biden regime, the rest of the world is fed up with the Federal Reserve printing money out of thin air and demanding to trade it for things of real value. So this is why Russia has already backed its currency with gold and many other nations are expected to follow. But what happens if the dollar loses its global reserve status? Well, for most of us Americans, the US dollar is all we know. All of our hard-earned money is completely tied to it, whether it's through stock market, bank accounts, pensions, 401ks, etc. The value of our dollars, our life savings, could be literally wiped out in a matter of months, weeks, or even overnight. And look, I'm not a financial expert. Please do your own research. But I believe that now, more than ever, it's a good time to consider transferring at least some of your wealth into physical gold and silver, real-world assets that have stood the test of time. And for this, I'm confident recommending Noble Gold. You can buy gold and silver directly, or you can even transfer your IRA into physical gold and silver with zero taxes or penalties. Most importantly, you can trust your wealth with Noble Gold. They've got an A+ rating with the Better Business Bureau and hundreds of positive reviews from the folks they've helped. So, look, I want to be really clear, though. You don't buy gold and silver to get rich. You do it to protect your wealth. But if things get really tough, history has left us many stories of folks scooping up land or other valuable assets for a few gold coins. So now is the time. If you want to learn more about this, open up a new tab right now and go to goldwithseth.com, or you can call 877-646-5347. Again, that's 877-646-5347. Also, so another quick message for you. I'm sure a lot of you own your home. Well, not only is the market going crazy, but the deed of your homes is the only document that proves you own it. The problem is, though, the deeds to our homes are online now. So this means that a criminal can find your deed, forge your signature, and then refile as the new owner of your home. Then he'll take out loans using your home's equity and leave you in debt. FBI reports are showing that real estate fraud is one of the fastest growing cybercrimes in America, and it's already costing Americans massive amounts of money. And unfortunately, you won't know until the collection notices show up on the loans that you yourself never took out. Homeowners insurance doesn't cover you, and neither do common identity theft programs. Home Title Lock is your peace of mind that the deed of your home is protected, where you can protect your home equity and title for just pennies a day. So to learn more, go to hometitlelock.com/Seth and use promo code Seth. Then enter your address for your no obligation home title scan to see if you're already a victim. It's a $100 value for free. So be sure to use my promo code Seth, SETH, for your free title scan at hometitlelock.com/Seth. All right, thank you for listening to that, folks. And it's interesting, John, because I am not someone, if people that watch my show, I'm not pushing hardly anything. If I was making money from all the Bitcoin companies that wanted me to promote their digital wallet programs or anything, but I've told them no, because I've been so cautious about only recommending something that I truly, truly believe in. And, for me, it's like right here on my desk, I've got a little 10-ounce bar of silver. This is what I believe in. This is real. It's not a number in some wallet. And so, and again, like whether someone goes with Noble Gold or any other company, to me, it doesn't really matter, right? Like what I want to see happen is when all this stuff hits the fan, that the folks that were smart and planned ahead, that tsunami isn't coming and they're left without a boat. So, anyway, thank you for sitting through that, but it's an important message.
Well, I think it's the most. I think it's the most important message. I mean, that was one of the things that I've been asked to do a lot of different interviews, but I was very selective. And one of the things that caught my eye is that wow, great! You were talking. Noble Gold's been around for a long time, and it's a great service that you're offering this because people are not aware. They don't teach about gold in the education system. Your banker doesn't talk about gold. That's the last thing. Your broker's never going to talk to you about gold. Why? Because you might decide, hey, you know what? I got $100,000 in the market. I'm going to buy 50% gold and just bury it. Buy it, forget it, and bury it. I'm going to buy some gold here. I'm going to put another part into Noble Gold. I'm going to have some over here. I want some at home. And so I think you're doing a big service here because now that's your insurance. I mean, if I always give this analogy. If for example, there was a ship called the USS Central America, which sank with tons of gold. I've picked up a Central American gold bar. It was massive. Anyhow, once the ship sank, all souls were lost, tragedy, people died. Well, here come the treasure hunters. The gold is still there. If you have a house and you have a floor safe or a freestanding safe that's fireproof and your house burns down and your gold is, you're going to go open up the safe. Oh, my gold is still there. It's your insurance. No one can take, when it's in your hand, it is your baby. You can't hack gold, and it's yours. It can't get stolen. Oh, well, someone made off with the gold. It's like, it is I think that having a layered strategy where you've got gold in places like Noble Gold and silver and gold is part of a layered strategy. And it's the way to go. I think that the best thing you've been consistent on this too, which is wonderful because people really need to know. And the general public doesn't have all the information at their fingertips. And it's somewhat complicated sometimes,
Yeah.
but Noble Gold's been doing it for quite a bit times. I have a few clients that work with Noble Gold, but I think what's critical here, I talked about the stock market crashing and housing. This was an interesting thing. The situation happened during the last crash. What part of our exit strategy was, okay, so we're going to get rid of all the real estate. We dumped everything in 05 and 06. And of course, everyone said, you're crazy. My real estate's going up forever. I'm like, obviously, you don't know my father and my relationship here. I know this market. I've already been through it. This is my second one. This time I came in, I was ready. And boy, we was like, we during the last crash, we killed it. So I started buying my client. We had them buying gold at $365 an ounce. We ran those houses up to the highest prices. I jacked the prices up 10-15% over the asking because I knew the banks were at that time doing what they were doing, stated income loans. It's the top of the hill, Newport Beach, Newport Coast. Everybody wants to live there. So I want to buy the house. Well, how much do I need? Well, go down and make a statement to your banker, your loan guy. It's like, I need 2 million stated income. You state what you want. You'll get the address. You'll have the beautiful house. You'll see the ocean and all the pretty girls will chase you. What more can you want? Sign right here. Sign right here. Client gets our money. We get our profit. Going to buy some more gold. We sold all the real estate. Housing is going to crash when it comes down. We're going to buy the bottom. We bought gold at 365. At the end of the market, we were at $1,200 gold and picked up a house at 60%. That person never has to work again. And I went through that entire strategy. The house is paid off, cash now. Doesn't matter about the rise. Doesn't matter. It's already paid off. House drops 50%. It's paid for. Gold's going to go to 2,000. That's going to continue to make money. And that's where your position on gold, my position, now I'm a big stock guy. I'm in the gold stock market. People say, what about the stock market's going to crash? I said, you cannot crash gold and silver, my friend. You
Actually,
cannot
that's a good
bankrupt gold
question
and
I
silver,
have
my friend.
too. So I'll go ahead and finish about gold and silver stocks, but I have a really important question about the stock market I want to get to.
During the stock market crash, there was a stock out there, and people look it up. Home stake mining from 1891 to 1987. The stock went from $9 a share in 1891, and in 1987, and they disappeared that company for a reason, and I know why it disappeared. That stock went from $9 a share to what? $100,000 per share. And during the stock market crash, I think it averaged 35 and 38% from 1924 to 1932. And during the Depression, World War II, people made on average 30, they were paying dividends and making money. I worked with a family that made a lot of money during the Depression because they own that stock, which is part of my portfolio strategy. If you go back and look, home stake mining, everyone should go homework. Okay, home stake mining, stock price. And because people always said, well, John, if the stock market crashes, what about your gold and silver mining stocks? I said, gold. I said, how do you bankrupt real estate that's backed by gold and silver in the ground? If at the end of the day, it's really not it is the stock market, but we're talking about real estate. In the real estate market, the value of the money is on top that they bid it up. When real estate crashes and finally goes upside down, the value goes to the ground because people sell and they panic and they go into housing. If you look at the price of the price of gold back in 2007, it was like $595, $625. I was a broker at Monix at that time, managing about 16 million in silver and gold. And then what happened? It 605, 750, housing crash. And what did gold do? Gold took off, and it took off. Silver went to $50 in 2011. That was only what, 3-4 years after the crash. Silver went from $9 to $50. All my clients, I had put tens of millions of dollars of my clients in the gold and silver. And when it finally crashed, they were like, what's up? It didn't affect us one bit. And then I had them in gold mining stocks. So there are certain stocks, but home stake mining, everyone should know. I'll read one sentence here. Home stake mining was able to increase in value from $71 a share to $528 a share in the period when from 1920, the roaring 20s, to 1940, while every other stock that wasn't gold related went off the cliff.
Yeah.
Yes. So if you're holding your physical gold, you got some in Noble and you got some in the stock market, that's what I call a layered defense. And that's what my focus is. I want people to have it's a 7-layer defense plan where it's like you go to play, if a good craps player, I had a client who was a professional craps player, a lot of money. I used to sit there and we're going to do this, Perez, we're going to do this here, do this here, do this. And this guy's throwing $2,000, $3,000, $7,000 per number. And I'm watching, and it took me a while. Finally, I saw a pattern, and I saw there was 5 moves that he always used. Because I said, I know you're always doing the same thing. He goes, that's my money right there. That's my foundation. These here are the long shots. Got the 50 to 1, got the 100 to 1, but I got to do these here consistently. And I thought this is no longer gambling. This guy's got a strategy.
Yeah.
Well, it worked. So it's the same. I did the same thing in this market. And the lessons that I learned in the prior cash, where I had one client who was already a high net worth client. They already were multimillionaires. I was able to take that strategy and put it into a larger pack. And now this time I plan. This time I am waiting for this crash. I am waiting for this here. We got Basel III. We got Russia going to the gold standard. We got China going to the gold standard. And we got the dollar collapsing. And we got Powell self-destructing the economy. And what's really going to throw us off the cliff is when we hear about the Russian oil cap. The Inflation Reduction Act by Yellen is a Trojan horse. We're only going to pay $60 a barrel for Russian oil. Russia's going to say, niet, we're not going to sell it to you. You will have no oil because you shipped all your oil and natural gas to Europe. Now we have nothing, and it's going to backfire. It is going to backfire.
And so I want to talk about,
came out with the article yesterday.
Yeah. So in terms of, you said that you expect the real estate to be 5 times worse than 2008. So what is the timeline of that? Let's just say that right now a house is worth $1 million in your average area. Okay. I'm not talking about, in the reddest county of Florida where everyone's moving to, but it's your average house in America is worth $1 million. In 6 months, what do you see the value of that house being?
I say $1 million house in a pretty much average area. I think by spring, I'm going to say May. We bottomed in the stock market, bottomed in March 909. The S&P 500 went from, I forgot that the high was from 2008, October 2008. It was in March 2009 that the S&P 500, it was just collapsing. Went all the way down. It bottomed at 666 S&P 500 on 3909. And from there, that's when the stock market based. But as I said, the housing market kept tumbled all the way until 2012. In some cases, never recovered. So that was the paper side of things. But it was that I was out in the field and I was like, oh, well, the stock market's got a base. And I go, yeah, but that's only a small number of Americans have stock. A lot of people don't have stock. That's a small sliver. It's not legitimately representing Main Street America. Very important here. It was by that spring and that summer that, man, it was like the cartoon where the big snowball's coming down and there's hands and ski poles sticking out of the big avalanche. The snowball's getting bigger and it kept going. It kept going. Even though the stock market based out, they had done enough damage to where the rug was pulled out. So if I was to take a number, I'll go with the summer. Let's say take a number from housing's already pulled back now. Let's say take a number from today, September 15th, 2022. If a house is like $1 million right now, was probably 1.1 million. 3-4 months ago, they were probably asking 1.1. It's now $1 million because the price cuts are coming in. I'm going to say by this next summer, selling time comes along, that house is going to be selling somewhere between 600,000 and 700 and 800,000. 600. It's a big gap there. It all depends, but I think it's going to be a big pullback. And there's the equation that nobody's talking about. I'm the only one on planet Earth who's going to even say this. The energy situation this winter is going to be a black swan event that investors and the average person just not going to see it, and I'm telling people, get a wood stove and call up your firewood guy before Halloween and ask for 3 or 4 cords of wood.
Goes, we just bought like 15 cords of wood. my whole backyard's a mountain of wood.
Yes. Yes.
Yeah.
Yes, so, Seth.
But
Man in America. Yes.
This is like, I will never recommend for people to do something that I don't personally do, right? I've got backyard chickens. I've got lots of firewood, getting my wood stove installed in the next couple of weeks. But so John, if real estate, say, comes down within 6 months, say 30%, that's big, that's significant.
That's monstrous.
What happens to the stock market? And most importantly, I mean, we've talked a lot about solutions here. And I want to encourage people, just a quick side note, if you're on Telegram, go follow John. Go just search for Silver is Money, and you're going to find John's group. It's about 5,000 active people. Hopefully after the show, it gets to 6, 7, 10,000. That's going to be fantastic.
Yeah. Super
and
active.
if you're not on Telegram, then create an account and go to the Silver is Money group. It's a great place where you're very, very active. And that's where people are going to find a lot of solutions because look, the people that rushed out and they're on their 3rd or 4th booster and they think this is all conspiracy, as much as I want to, we can't help them because they won't listen to us. But for all of you that are watching, know what's going on. And you've got really smart people like John that are trying to say, look, this is what you can do to really protect yourself. So I want to encourage you to go follow and join John's group on Telegram to search for Silver is Money. But one thing I really want to know, John, is what happens to the stock market? And this is not even getting into the collapse of the dollar. Once OPEC comes out and says, you know what, the US dollar is no longer the only major currency. We're going to be doing it in tons of other currencies. When we lose that reserve status, that's a whole other, you call it the black swan. That's like the black dragon from hell event that happens globally. But just looking at the normal trajectory of the housing market coming down and all this, what do you see happening to the stock market? And I'm talking the mainstream stock market, not the silver and gold mining stocks.
Perfect question. I'll tell you what I see. This is one scenario, and there could be many, but this is the one scenario I have is that the stock market loses 50%, 50, 60%. It can overshoot. So we're talking, I'm not sure what the Dow is today. Let's get a live price here. So the Dow is down. It's at 31,000. Okay, perfect. 31,117. The Dow losing 50, 55, 60% would put us at what? $15,000 Dow. Now, if the Dow went to $15,000, my one scenario of many, because I don't corner myself with scenarios because there's too many variables here. So I would call this a Mr. Various Variable Scene. There's so many variables that it's like, but I will say one scenario I have is a 1-to-1 Dow reset, which has happened before. That is the Dow Jones going down 50, 60% down to 15,000. And then what does gold do? It corrects back up to a 1-to-1. 1 ounce of gold equaling 1 share on the Dow. And you can look this up. This has happened before. This is not an obscure conspiracy theory. So all of a sudden, you're sitting at home, you're like, wait a second here. You know, if gold goes to $15,000 and then the gold to silver ratio resets, then it goes to 10-to-1. And all of a sudden, that would put silver at $1,500 an ounce. Well, yeah. If you got 1,000 ounces, you got $1.5 million. You lost 70% of your house, but you made it back on your gains in silver. So they're your insurance. That's what your insurance plan is there for. That's your bulletproof vest. That's your economic body armor is silver and gold, you know? So a Dow to gold ratio of 1-to-1, $15,000 Dow, $15,000 gold. And to add silver in there, if silver corrects back to its normal ratio of 10 ounces of silver for 1 ounce of gold, that would put silver at 1,500. That would put gold at 15,000, the Dow Jones at 15,000, housing down 50%. And all of a sudden, you've got a potential basis there for a total reset that you can restart from there. Now, I can go one step into conspiracy land, talk about the IRS going away, you know, and the United States no longer being a 1793 corporation belonging to a foreign state, becoming a republic again, a U.S. constitutional republic. And suddenly that housing debt wiped away in a jubilee. You're, oh God, I'm down on my house. You know what? You really shouldn't be down. Why? Because the bankers created this fake number here. So in my opinion, I don't believe Americans, I personally don't believe that Americans who lose any equity in their house, I don't believe it's their debt. I believe it belongs to an entity that created that debt here. So I have a kind of, if I had a dream scenario that I would speak about in public, it would be that scenario where we have a debt jubilee, housing lose 50%, Dow Jones 50%, gold up to 15,000, silver follow up back to its normal ratio. All this debt, to me, in my opinion, should be all this debt should be taken away, put into the Federal Reserve, as since it's a private corporation, and flush that whole thing down the toilet and bring back a gold-backed constitutional republic with the Second Amendment and First Amendment. Because much of this debt was created by bankers who were influenced by foreign entities. So to me, that's if I was running the country and I was a central planner for the United States, and I had to look at some realistic situation, because I'm not a doom and gloom black pillar. I believe there's hope. And if the meek are to inherit the earth, then we are not leaving. Somebody else is leaving. But the meek, if they inherit the earth, that means they're not leaving here. Okay. So on the other side of things, I think a Dow at 15,000, gold at 15,000 would be a great place for a guy like Trump to come back in here and talk about a gold standard. Since China will be on a gold-backed yuan, Russia, this may be the place for the United States to step in and intervene in the current vegetable administration we have called Biden, which he did not win the 2020 election here. Trump repositions himself back into play. Americans will be, at that point, most Americans in this kind of situation, most Americans will be suffering so much, they will be at the precipice of realizing that this whole situation that we had was unfeasible from the beginning, but the Democratic Party should never exist again after this. It is over.
And most of the Republican Party too. It's not like we need a whole
the rhino, as Trump said.
And you bring up a really good point too, because it's easy for people, especially looking at the overall discussion on the show. It's like, oh, you're black pilled, and it's like, my perspective is this. I also believe, similar to you, that we're going to go through a significant collapse of a lot of our systems. And the reason is because a lot of our systems are evil. To the core,
Yes.
they're corrupted,
Yes.
evil, rotten systems.
Mm-hmm.
If you want to get rid of them, it's like if you have cancer on your body, you have to cut it out. It's a painful process. It doesn't just remove because you ask it to. So we have to collapse this old system. And that's what I'm preparing for, is to get through that period of time the best I can and help my friends, help my families, help the audience that's watching to make the right decisions now to protect themselves, because God's going to need us on the other side of that. Because on the other side of
Yes.
that,
Yes.
we're going to need, true God-fearing,
The
patriotic
armor of
people.
God must be
Oh
pulled out.
gosh. Yeah. To
The
really
armor of God
rebuild
now.
the nation and rebuild the world. So I'm right with you on that. So, John, we're now going to transition into the Q&A portion of the show. And I'm seeing we've got a huge list of questions, which are going to be a lot of fun. And I wanted, there's a lot of discussion about September 23rd. So I want to get your thoughts on that, September 23rd, September 24th. And so for those of you that are watching, if you want to come join us for the Q&A, which I highly recommend it, you can on Rise TV. It's free because there's a free trial to Rise TV. In the description below the video is a link for a free trial. If you choose to stick around, which you don't have to, but if you choose to, Rise is $9.99 a month, and it's the best way to support not only my work, but the team of people that are working on Rise TV to work to expose the truth, get this information out there. Plus, you can actually ask John your personal question that you have, whatever it is, even where he got his beautiful yellow shirt today. We can have that entire discussion over on Rise TV. So I just want to make sure that everyone that's watching goes to Telegram and finds Silver is Money and joins your chat group, because there is so much important knowledge that is being shared in that. And you're dropping messages and content. It seems like every 5 minutes you're interacting with that group. So it's just a fantastic place, because all of us that are watching, we have a role to play, and whatever's ahead of us, we have to be able to get through it, which we will, and rebuild mankind on the other side of this. So any final words before we jump into that Q&A, John?
I'll tell you, September 24th, September 23rd, I believe that date, that's a key date here. That was pretty much when the stock market started crashing back in 2008. So there were a lot of things that came out during that time. I believe that I think in that time period between within 24 to 48 hours of the 23rd to the 24th, we're probably going to be seeing some sort of event. I think we're going to see, I think Russia is going to start bombing leadership in Ukraine. I think they're pretty much, they realize they have to go to the next level. I think I wouldn't be surprised to see China invade Taiwan during that period of time there. You got the Vatican pulling in the Vatican's pulling in all their money, their assets. So if the Vatican is doing it now, then you better get it. You better hurry and move quicker. So
it's not just the Vatican. If you look at the COMEX, the elites, the big banking families, they're all pulling in physical gold and silver. They have been for the past couple of years. I mean, I've got Andy Scheckman coming in on pretty often. We've talked a lot about that. So let's go ahead. Let's continue this conversation over on Rise TV. I want to dig in